Hello, friends. Welcome to 2026. Happy New Year. I hope everyone had a fun Christmas like we did and just a great holiday season. I love this time of year. As we move into 2026, I want to thank you all for the amazing feedback on these videos. I really do appreciate it. I will continue to record these and send you updates as long as you are enjoying them. Remember, you can subscribe to the YouTube channel and get notifications when new videos are posted. Now, let's look back at December and also the full year of 2025 as we ended on another really good note. So, for the third year in a row and 6 of the past 7, the S&P 500 hit double-digit gains, a remarkable run. The index climbed just over 16% for the year. It also recorded 38 new record highs. The Dow Jones was up almost 13%, and the Bond Ag Index finished up about 7%, so really good across the board. The S&P 500 has recently been moving sideways just below its October highs, and recently we've seen big tech and AI stocks have some pullbacks, which is normal as investors begin to take profits after such a strong year. Other parts of the market, like banks, industrials, small caps even, are hitting new highs. So that is good broadening out. Inflation data and third quarter GDP were positive in a time where unemployment is slowly ticking higher. So we got some upside with those reports. The November CPI report, Consumer Price Index, rose 2.7% year over year, and core CPI rose 2.6%, both cooler than expected. So we're getting closer to that 2% target. A GDP report showed 4.3% growth, really blowout, and was obviously much higher than expected. We'll see how it is fourth quarter and moving into next year, but because of all the tax refunds and sort of stimulus, we are expecting another good year. The Fed delivered another small rate cut in December, so 3 total for 2025, lowering its benchmark rate to 3.5% to 3.75% as a range, and signaled it anticipates just one more cut next year. I've seen a lot of other economists say they think 2 or 3 cuts. The Fed's even a little bit divided. We've talked about that. Time will tell. Consumer sentiment is improving slightly, with the University of Michigan survey showing optimism about personal finances actually up 13%. Inflation expectations have dropped back to the early year levels we saw, suggesting that people feel less worried about rising prices. Those worries obviously went up when the tariffs were announced, so that's been coming down. However, confidence overall remains mixed, and we care about confidence. We'll be watching that. The bottom line, as we head into 2026, the outlook is positive, but not without challenges. Cooling inflation and tech tailwinds offer reason for optimism, while a softer job market and policy uncertainty may bring some volatility. I'm fully expecting a correction anytime. After several years of exceptional gains, returns could be slow, but steady growth and healthy companies suggest the foundation remains solid. Hope this was helpful. Have a great night. We'll see you next time.